Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Good afternoon and welcome to the AICPA Town Hall Series. I'm Eric Auskerson, one of your hosts for today, and as usual, we've got a lot to cover. We're going to kick it off talking about the latest related to the tax deadline. Then we're going to get into a whole bunch of business relief discussions. You can see it's definitely turning into alphabet soup here. The final stretch of PPP, ERC, EIDL, SOVOG, and RRP. We'll get into what all of those mean. We're also going to give you some practical tax tips as you enter into the final weeks of the tax season here, and then we'll close with open forum. You can earn CPE by responding to 75% of the pop-ups. And if your browser freezes, please refresh it. And you've got that great toolbar at the bottom where you can ask questions and download today's materials. So take advantage of that. We've got a full team here. Chris Esposito, leader in the tax area at the AICPA. Mark Peterson leads advocacy. You know, Lisa Simpson running firm services. And we've got Carrie Weston, who's going to be giving you some of those practical tax tips. And once again, I'm Eric Auskerson, and I lead the business and technology subsidiary AICPA.com. So with that, let's bring Mark up. And Mark, welcome.
Thank you.
Another busy week talking to our key stakeholders. A lot going on with the IRS, but it's not just the IRS. It's us having dialogue with all of these different groups, and what we do every week is bring the latest information. So let's just kick it off. We've got a picture here of someone who everyone knows, and a lot of discussions going on with the IRS related to the tax deadline.
No, absolutely. Thanks, Eric. So the way I'm going to handle this is to start with the conclusion, because this is going to be a frustrating conversation for everyone. But basically, at this moment, 3 o'clock, April 8th, we cannot recommend that you hold out, that they reconcile estimates and the other deadlines that were left behind to May 17th. We cannot recommend that at this point. There is some possibilities and there are some credible rumors that are out there, but in good faith, we can't advise anybody to hold out. So we do believe you need to move forward. Focused on April 15th related to estimates and some of those others that were not reconciled on May 17th. But I'm also going to ask for your patience so that I can talk you through this, because there is a possibility. And there's also a story here. After the last extension, filing season, we immediately started to talk to stakeholders, membership, the IRS about this year and April 15th, and whether the IRS would be able to handle April 15th of this year. Our conclusion was no, and that actually an extension of some length was inevitable. It was going to happen. Ultimately, we came down to the idea of June 15th based on a lot of factors, a lot of input from membership, state conformity, state budget issues. And we know that that's not everybody's view. The membership has different views on what the deadline should be. Was our view. So basically the answer, the most important thing was, though, whatever the IRS decided to do, to declare it early, to give some certainty and to reduce anxiety, because we're still in, the throes of the pandemic. Businesses are trying to figure out what they're doing. Clients, practitioners, figure out what you're going to do, IRS, and say it. And so it became obvious that they were not going to respond. And so we started to have conversations with Congress, not just us, small business. The small business committees were hearing from businesses that would be impacted, others in the practitioner community. And what occurred then, and it's kind of important to remember this, is heading into a March 18th hearing, the night before, the announcement was made of the move to May 17th. Okay, the night before the hearing in the House Ways and Means Committee. So obviously that was when estimates and other deadlines were left behind, which was a big subject of that hearing in House Ways and Means. When the commissioner was challenged about reconciling and bringing everything to May 17th, basically his response was no. That did not sit well with some members of that committee. Following that hearing, they started to work on a letter that, specifically focused on estimates being moved to the 17th. But one of the key things is that it was a bipartisan letter. And I mean, they're not even naming post offices right now in a bipartisan way. It's so challenging up there. And so through the grassroots, through reaching out to the people that join the town halls, working with the state societies, working with membership, the firm networks, others in the preparer community, we were able to bring a lot of support to that. That's going to culminate, we believe, in a piece of legislation that could get dropped as soon as this afternoon in the House of Representatives that, again, would bring estimates to May 17th. Now, again, I said it was going to be frustrating. I know people are out there saying, well, what good does that do me? I've got to figure out what I'm going to do about April 15th. And we understand that. We completely understand that. But I will also tell you that other than a law that is signed by the president, passed the House and the Senate, the next strongest message is legislation that is introduced. Agencies do not want statutory override of their authority. And so it is a very strong message to the IRS. Timing is not is what we would want. And I got to tell you, if we had more time, I think I'd have different message for everybody. But I think the other element of this is there's another hearing on Tuesday at the Senate Finance Committee.
This upcoming Tuesday, yeah.
This coming Tuesday. Again, time's running out. I'm aware of that. But the last time we got an announcement right before a hearing in Ways and Means, and now the Senate Finance Tax counterpart is having a hearing on Tuesday. So is there a possibility that we could get another announcement prior to that hearing? This is going to be a subject of that hearing, 100%. It's possible, but we can't tell you for sure that announcement's going to come out or with confidence. So it is a possibility. It could happen, Eric. But right now, we think that we really just have to focus on April 15th for estimates and the other deadlines. And Carrie Weston, who's up in the program here a little later, is going to talk through some kind of practical recommendations and some firm suggestions on how to deal with that. And then, just to kind of, conclude, disappointing, no doubt about it, but really a phenomenal effort. You don't win unless you score. You don't score unless you shoot on the net. And we got a lot of shots on net. We pulled the community together. We made a lot of positive noise. We disagree with the IRS on this, but we're very supportive of the IRS as an agency. We depend on them. We want a good relationship, but we're also going to be very vocal when we disagree.
Mark, I mean, that's just a great summary. And I know this community, we've got 10,000 people on every week. The comments that have come in over the past month or so related to this, how you were surprised, we were surprised with the first extension, not including the quarterlies. Yeah. Absolutely. Your team's been working really hard. So many members of attendees of the town hall actually reached out to their elected officials. So yeah, as you said, a lot of shots on net. People did listen. You've got this legislation that's going to potentially be put into motion tonight. But with that said, we'll close out today's session with the practical tips from Kerry. We need to soldier on a little bit, but this has been a great dialogue. So commend you and your team on that.
Absolutely, thank you.
So going on to but that's not the only thing that's going on at DC.
No, it's not.
Yeah, we got a $2.3 trillion bill, which we're not under the time pressure on that. We're gonna have some time to talk about that, and we also have a couple of other items.
No, so the next big thing, right, is going to be this multi-trillion-dollar infrastructure project, which is definitely going to have revenue or tax provisions in it. Right now there's a 14-page summary out there. $2 trillion is going to be 800, 900 pages of legislative text. So what we're looking right now is summaries. And this is the trial balloon phase to decide what they think they can get through the political reality. There's also something here that is kind of the situation that we're in on the Hill right now, where process will drive product. So whether or not they can do this with 50 votes in the Senate with the vice president breaking a tie, or whether they have to get 60 votes and have a bipartisan package. That process is definitely going to drive what's in the package. And if in fact they use these it's archaic parliamentary procedure issue. If they have to use that, it limits the things that can be included. So, again, I think there's going to be a lot of proposals, and then there's going to be a process impact on what comes out the other end. Congressional oversight, count on it. Absolutely count on it. The House has a select committee that is just set up on COVID response. And when you set up a committee to focus on COVID response, they're going to find things to talk about. They're going to have hearings, and they're going to focus on where the public money went, how it was spent, and how effective was it. And they did put money in. A lot of these bills put money into actual oversight, give the IGs authority, all kinds of things like that.
Well, Mark, and we'll be talking a little bit about the PPP extension here with Lisa, but there's a chance that right now it's not very likely that this could be made retroactive for the Schedule C filers or more money added. But if something else happens related to one of these other relief programs, they may try to solve 5 problems with one bill.
No, so there is a lot of political interest. So a lot of people went on a limb saying they got to address Schedule C's and the smallest, right?
Right.
But then they're running into a timing issue and a funding issue. And so, will it be a lot of money that gets put in? It's hard for me to see that. It's possible, hard for me to see that. But will they try and figure out how to fix this? We believe that they're going to come back next week and focus on this. And to your point, Eric, you can't fix it unless you have a vehicle. And if there's a vehicle moving because they're addressing other issues, this definitely could be something that's included.
Well, thanks, Mark. We'll bring you back to open forum, and I'm sure there'll be a few additional questions related to the tax deadline. So with that, we'll bring Lisa up. We're gonna get into talking about the state of PPP. Here's the current table that shows how many loans have been approved and the total net dollars for this round of PPP, which was launched in January of 2021. It's almost 4 million businesses. Almost 4 million businesses have received a Draw 1 or Draw 2 for $223 billion. Here's the list of the top lenders. You all know that we've put forth the CPA Business Funding Portal. Our partner is Biz2Credit, and we've been working very hard at supporting 1,000+ firms that are leveraging this platform. And right now, this just shows the partnership with Biz2Credit. They are only supporting firms for new applications. They've put on hold any direct applications, and that's where that stands. And I'm going to talk a little bit more and bring Lisa into the discussion about what's happening here in this final stretch. We're in extra innings. We'll see how long it goes. As Mark just said, to be determined if there will be more funding appropriated. Right now, the SBA states that the funds are forecasted to run out by the end of April. The program goes to May 31st, but if the funds run out, that will be the end date. So there's really 2 dates here. And what's happening? The lenders are working on the resolution of the PPP application error codes. There's over 65 different error codes. The SBA has been giving more authorities to the lenders to resolve them, but there's still thousands, probably over 100,000 applications that are held up. And when they're held up, sometimes more documentation is required. So these are things I know the firms are working with their clients on. One thing that we do know is this round is completely different than 2020. Because sometimes a firm or business will say, hey, I didn't need that back in April of 2020. Well, we're not in April of 2020 anymore. So this is a different program. The different administration, for a number of reasons, has put in different checks and balances. The other
sorry, Eric, on those error codes, on our call with the lenders today, they're not seeing magic lifting of error codes happening in bulk. We talked last week, I think, about a new process at the SBA using machine learning to try to clear some of those codes out. And that apparently is still working its way through the system. So no magic lifting of error codes just yet.
That's well said. And what we're seeing right now is firms are looking at they're reviewing the Schedule C clients. The move to the gross income calculation has made a lot more people eligible. Every day, firms tell me that they've identified clients that were not aware that they were eligible. One thing just with the error codes, feel free to reach out to our teams. I know there's questions on them or applications that are stuck. we welcome hearing directly from you related to any of those issues. One other element that is gaining a lot of interest are first draw applicants applying for the second draw. You can do that now. The SBA just opened that capability up. You do not need to have completed your 8-week covered period. You just need to affirm that you've used the funds. If you've used the funds, you can put a second application in. We are actively taking Draw 2 applications as part of the CPA business funding portal. And this slide just highlights what Mark highlighted. There is a lot of fictitious activities occurring out there. The SBA is aware of that, and all of the lenders are stepping up. What they're doing related to kind of verification and document review. And we continue to recommend to the firms, make sure you've got a clean file and you are ready for these third-party reviews. That could happen. They happen right now during the application phase, but they are definitely going to happen during the forgiveness phase. So with that, Lisa, we'll bring into the state of forgiveness. It's a question that I know you receive a lot, and this shows where we're at, getting close to 50% of the 2020 PPP loans being forgiven. And the number is, when the application acceptance rate is very high, it's above 99%. The real issue is just getting your application through the SBA process.
And we're already getting questions about, are any loan forgiveness applications above 2 million getting through the SBA? Is it normal to have an application that's been submitted for forgiveness 120, 150 days outstanding? And the answer is unfortunately yes. Our lenders that we talk to are saying the same thing. The $2 million and above are coming in a trickle. And, they're just kind of scratching their heads waiting for the SBA to move from focusing on the current round of PPP loan applications to divert resources over to forgiveness. So we do expect that once the second round closes, the SBA will put more effort into clearing out these forgiveness applications. We're not hearing one way or the other on the loan necessity questionnaires and how they're being interpreted. So that's kind of a black box right now, but we're certainly keeping our eyes open. We've talked in the past about, don't be surprised if you get a request for a lot of documentation regardless of the loan amount. We're hearing that the SBA might ask for documentation for loans of $10,000 and less. So they're trying to figure out how they're going to approach forgiveness more efficiently and effectively. They're trying to use error codes and certain flags to target applications that they think might have a higher risk of fraud. So don't be surprised to get additional questions around forgiveness.
And right now, this program is going to end. It will probably be over $800 billion in total loans, and over 9 million, or maybe even 10 million loan applications. So there's a lot of work to be done. And what we do know is that the SBA is going to continue to work on streamlining that process. So one other thing that we've known is a strategy you can take into account is patience and waiting, because most likely the forgiveness process will get simpler as 2021 proceeds. So Lisa, with that, here we are. It's kind of back in April of 2020. I remember talking about the importance of stepping back and looking at all the different relief options. It's the same thing today. You've got all these different choices available to your client.
Yeah, the list has grown since we started our slides last year. And what we wanted to do today is just kind of, as Eric said, take a step back, make sure that you're thinking about more of the options than just PPP or the latest program that's launching, to explore some of the others. What we've done with the slides here, and this is important if this is your first town hall, it's really important to download the slides that are in your resource materials, because we include links in all of these slides. So we want to make this as simple for you as possible to get the basic information, because there's a lot of details to keep up with and you can't keep up with everything. So know the basics, and then think about how these programs interact with your particular client base. We talked last week about the Shutter Venue Grant program. That may not really be option for most of your clients. So then you have to think about, is this one where I want to devote my staff time and resources and brain power to serve just a couple of clients? Or is there someone else in my network that I can reach out to? Is there someone in my networking group or someone in my local area that I know works with those clients? And just, you don't have to be an expert in everything, because these programs do change and it's going to be tough to keep up with everything. And then communicate with your clients about what the options are. Eric has talked a lot in the last month about setting expectations. So going into this round of PPP, we did not know there were going to be 65 error codes and all of these checks at various gates along the way. So we said, yeah, you're going to get your money pretty quickly. It's going to be just like last time. And it wasn't. Same thing with shuttered venue grants. The portal opened today and the site's down because it's been overrun. So you've got to really be realistic about when the relief might get to the client. So just think about all of these things as you're deciding the strategy within your firm about which programs you want to support in your base. But, I got to talk about PPP, and very quickly on the next couple of slides, I'll remind you about the resources that we have available to you for this ever-changing program. One thing to think about with forgiveness, Eric mentioned patience. We do know that the SBA is actively looking for ways to streamline forgiveness between 150,000 and 2 million. So if you're at that 1.5, 1.8, and you're trying to decide if you want to go ahead and apply, well, first, is your lender accepting applications? And then second, is it worth your while to wait just a little bit longer to see what the process looks like? So you've got some resources there for you to refer to. And then we'll dig into another really important relief package, which is the employee retention credit. So with that, I will bring up, oh, I skipped a slide. I'm sorry, Eric. I was so excited to talk about ERC. Okay, we're getting common questions about PPP covered periods. So I just wanted to address a couple of those with a link to the IFR in case you're curious about what's going on with covered periods. And then on the next slide, I took a resource that the SBA had prepared, and you've got a link to it in the header there. And we've added in the restaurant fund. We don't have a lot of details on the restaurant fund. You'll notice on that previous slide, there was no hyperlink because the SBA is still developing the program and there's not even initial information. But here's a look at how some of the programs intersect. So we'll be building this out as more details come around, and we'll be adding things like taxability and how to report and basis implications as we get that additional guidance.
And just one reflection comment here. The PPP program last year, it was launched 1 week after it got passed into law. The shuttered venue grant is actually, it's 100 days. That was part of the December 27th law. So it's 100 days. So things are happening at a different pace now. So they had more time to think through the shuttered venue grant option. Unfortunately, the site's down right now, but it wouldn't have worked. Last year, it took 100 days to launch the PPP program. That would not have kept the economy going. Right now, there's more time because of things like PPP to kind of adjust, and for the SBA to set this shuttered venue grant program up the way they want to. So now it's time to move into ERC. So I know we got plenty more to cover here. So Lisa, I'll let you kind of address that with Chris.
Thanks. So Chris is going to join us to talk about some information that was recently released. And then we're also going to hit some of the top questions that we've been getting through the town hall. So with that, I'll turn it over to Chris to catch us up quickly on what's new with ERC, and then we'll dig into the common questions.
Sure. Well, as a quick refresher, the employee retention credit, it's a refundable payroll tax credit available to employers in an effort to keep employees on the payroll during the pandemic. So it's just one of the items on the list that Lisa just showed you to help during the pandemic. So it was created by the CARES Act, and I need to walk you through these things because these three laws, because we need to see how they work with the IRS guidance that have come out. So the credit was created by the CARES Act, and in the CARES Act, it was set to expire December 31st of 2020. But then in December, we got the Taxpayer Certainty and Disaster Relief Act, And that actually enhanced and extended the credit through June 30th of 2021. Then when you just think, okay, I have a handle on some of it, a third piece of legislation, the American Rescue Plan Act, was signed into law in March of 2021, and it further enhanced and extended the credit through December 31st, 2021. So now with those three laws, we have a better credit and a longer term. But now, because there are three laws, the IRS and Treasury, they need to provide guidance related to all three, because employers need to know how to implement the credit, and each of those laws have some nuances and some differences. So let's walk through what guidance we have so that you know where to look for answers on how to determine if your business or your client's business is eligible for the credit. You can go back to the last slide. So last spring and summer, the IRS created close to 100 FAQs, and they posted them on their website, and that was to get us started on how to implement this credit. And they were only giving information on the credit through the CARES Act, meaning before PPP loan borrowers could actually look back and take the credit retroactively. Then in March of 2021, the IRS issued Notice 2021-20, which actually supersedes those FAQs. And it gives us guidance on wages paid from March 13th of 2020 to December 31 of 2020. But it included the instructions on how PPP loan borrowers could retroactively claim the credit, and the rules on the interplay of qualified credit wages with wages reported on PPP loan forgiveness applications. So there was really a lot of info in that notice. So that's where you look for that part of the credit. Then if you you can go to the next slide, because this is where we're going to talk about the credit for 2021 wages. And this slide is really a cheat sheet for you, which will highlight some of the big changes from the rules from 2020 to 2021. It's much more favorable in 2021. More employers are going to qualify for it, and for a larger amount of the credit. But I want to focus on, there is a notice 2021-23, which will explain all of these new rules and the differences from the 2020 wages and 2021. But one issue that I've been getting a lot of questions on that is different is there's a new rule on an election to use an alternative quarter to calculate gross receipts. Now, just as a refresher, if you're an employer, you have to meet one of two tests in order to be eligible to take the credit. So an employer, they have to look to wages in a quarter in which either one, the business operations are fully or partially suspended due to a government order, or two, the business had a greater than 50% decline in 2020 in their gross receipts, but that number changes to 20% in 2021 as compared to the same quarter in 2019. But the new rule says, okay, well, if you're in 2021, an employer can see if they qualify for the credit by satisfying that gross receipts test on qualified wages paid in 2021. They can either compare their first quarter 2021 gross receipts to the gross receipts in the first quarter in 2019, or they can actually choose to compare the gross receipts from the fourth quarter of 2020 to the fourth quarter of 2019, even though you're trying to get the test met for 2021 in the first quarter. I know that's different, like it's very confusing, but it is this special rule, and it is spoken of in that notice. So if you have questions, you can read that notice a little closer, and it will show you how to work that out. But I know I've gotten a lot of questions on it because folks really want, because it's better, it's more taxpayer friendly, because you have two options to look at your gross receipts to make sure that you can comply with that rule. So how do you actually make that election? Well, there's no form to fill out. You just claim the ERC for the quarter using that alternative method on your payroll tax return. So you don't have to do anything special. Now, the only thing we don't have yet is guidance on qualified wages paid in the second half of 2021, and that corresponds to the third piece of legislation, but that didn't become law until March. So the IRS and Treasury need a few minutes to work on that. So let's go to slide.
Yeah, what you have now, you and Lisa, you got the top 5 questions. I mean, it's kind of confusing to really kind of sharpen the focus and boil it down. So
Yeah,
why don't we
it
run
is
through it?
it's very complex. It's very confusing. And so I asked Chris if I could just, put her in the hot seat and
Mhm.
start getting some of these top questions at her. And because we're CPAs, we like to have fun with math. So you got the top 5 plus 1. So let's get started. What
Sure.
about wages for S Corp owners and their spouses? Yes or no?
Well, that depends. And I don't know because this is the number one question I get from members. Very frustrating. We don't have an exact answer yet. We have really urged the IRS and Treasury to answer this question numerous times, but their priority was to issue guidance on wages paid in 2020 and then on the first 2 quarters of 2021. Then they said, okay, then we'll get to these one-off questions that are very important. And this question can be broken down into what if you're a shareholder and a spouse that have a greater than 50% ownership, or what if you're less than 50% ownership? The result could be different, but we are waiting on specific guidance from the IRS, and we do keep hounding them about this. So I don't have the exact answer. Firms are split on this. I get emails all the time. Well, I think it's this, and then they'll come back, well, no, now I changed my mind. So we really need to wait for guidance to give you a good answer.
All right. The next question relates to eligibility. So is it based on full-time equivalents or the number of full-time employees?
Yeah, this is a real good question. How to determine the employer size? The answer is full-time employees. And the reason it's confusing is because the law makes reference to the rules of the Affordable Care Act, which uses full-time equivalent employees. But if you dig further down, the reference for purposes of the credit is to full-time employees. And a full-time employee is defined as someone working an average of at least 30 hours a week or 130 hours in a month. So it is definitely full-time employees and not full-time equivalents.
Which makes a more taxpayer-friendly answer, because that should open up eligibility to more employers.
Yes.
Okay. All right. So here's another good one, because you've talked about eligibility being dependent on a decline in gross receipts. Is PPP loan forgiveness included in ERC gross receipts?
Again, we don't know yet. The IRS has insisted they are working on this one. And the answer could be different from whether if you're a for-profit entity or a not-for-profit entity. So we are waiting for them to address it in both manners, but we don't have the answer.
Oh, and here's our another favorite. Do aggregation rules apply to ERC, and are they the same as PPP? Because we don't really understand those PPP aggregation rules either. So
nobody understands these rules are so confusing because they're not just related to the ERC. You actually have to look back into the tax code under section 52A or B or 414M or O, but most people didn't used to have to worry, didn't work with those. So now all of a sudden, oh, well, these aggregation rules apply. What do I do? So yes, they apply, and they are a bit different than the PPP aggregation rules. So those 2 code sections that I mentioned, if you're looking to how they work with the ERC, look to those. And there is a lot of there's some commentary in the notice, but it will refer you back to these code sections.
Okay. All right. Last couple of questions.
Yes.
This one's really important. How do I claim ERC? And what if I didn't take it for 2020 and because I had a PPP loan or I didn't know I was eligible? And then how do I take it for 2021?
Yeah, this is a real good one, and I get this one a lot. And so if you're an employer with no PPP loans, say I'm an employer, I didn't take an ERC in 2020, I didn't get a PPP loan, and then I realized, oh my goodness, I actually qualify for the credit in 2020. So now I'm in 2021, what do I do? Well, you go back and you file a 940X, which is an amended payroll tax return for each quarter that you're claiming the credit. The IRS will not allow you to just pile it all in one quarter in 2021 or the end of the year of 2020. You have to file an amended return for each quarter you're eligible in 2020. If you are a PPP loan recipient and the loan was forgiven, same thing, you have to go back and file that amended return for each quarter the credit was claimed. The only difference is If you are an employer that received a PPP loan, but you didn't get the loan forgiven, and I know that's a smaller population, but up until April 30th of this year, you can file all quarters of 2020 in your Q4 2020 Form 941. That's without, not even the amended return. It's just your regular Q4 941. But after April 30th, because that's when the due date of the form is, then you're going to have to go, if you realize you claim the credit, you're going to have to do an amended return for each quarter. So these rules, while they're going to make employers file numerous amended returns, and amended payroll tax returns are actually paper filed, which is really not a good answer, because those paper returns are going to sit for a little while at the IRS, because they're not processing things as quickly as we'd like. We did urge them to please find a simpler process. We just said, anybody that wants to go back and take a credit for 2020, they should just put that amount in their 2021, whatever quarter you're in 2021, just put it there. Flat out said no, because they view the 941 as a quarterly return, and they said there's billions of dollars at stake and millions of returns. And they said to move away from that with all the complexity for just a short-term issue, they just weren't willing to budge on it. So that's where we're at for 2020. 2021 is a lot easier. If you're just looking to you're going to take the credit in 2021, you can actually, if you need the credit quicker than a quarterly return, you can just reduce your payroll tax deposits, or you can file, in certain cases, Form 7200, which is a refundable. You can get an advance on the credit, or you just go ahead and file the quarterly 941. So you have some options.
So that sounds much easier.
Yes.
Now, what you talked about with the 2020 ties into our bonus question, which is how does this all get reported on the federal income tax return?
So if the credit is for 2020 wages, you have to actually reduce the amount of wages, your wage deduction on the return, by the amount of credit wages. So if it's for 2020, you have to include it on your 2020 federal income tax return, which actually is going to increase your tax. And you may not even have that money, the credit money, in your hands yet, because your amended return could be sitting at the IRS. So there might be a discrepancy there. You can't push that to 2021. You have to do the wage reduction in your 2020 tax return. If you've already filed it and you realize it, you're going to have to amend that return. So there is some administrative problems with that, but normal.
Chris, that's for cash basis taxpayers as well?
Pardon me?
Even for cash basis taxpayers, they have to record on their 2020 return.
Mm-hmm.
Okay. All right.
So, well, at least I know that we've got a few more things that we're gonna be getting into now. I almost thought we were jumping into the tax section with Carrie. That's to come in a minute. I think one thing that we're going to see here is we're going to talk more about capabilities. I mean, there's capabilities out there that firms are putting in place. This is complex to manage this, and I think that's something in a future town hall we'll talk about. Calculators, tools that can do this, that can help the firm do this effectively and efficiently, and also just to look at the value here. These are huge dollars, so We'll try to quantify how much these credits are in future town halls as well.
And last week, I apparently confused a couple people. On the next slide, I was trying to give you a helpful hint about filing the Form 3508S if your borrower is eligible for ERC. So cut to the chase. If you're using 3508S, it only gives you two input options: the amount spent on payroll and the amount of forgiveness requested. So if you've got a $100,000 loan, I'll use easy math, $100,000 loan, and you've got $60,000 in payroll costs and $40,000 in non-payroll. If you're ERC eligible, it is to your advantage to put $60,000 in your requested wages, or the amount of the loan spent on wages, because that gives you that extra $40,000 to use for ERC if you're eligible for ERC. So hopefully that clears up some of the confusion. Moving on to a couple of our other business relief programs, I've highlighted some of the details around the EIDL loans. The good terms, they've opened up the amount of the loan. The caveat here that I'd like to point you to is that bottom bullet, be aware of restrictions. These are not grants, they're not forgivable loans. You have to pay these back over 30 years at a good rate, but there are restrictions on how the money can be used. Then on the next program, you've got targeted EIDL advances, not the same as EIDL advances that we had in the initial CARES Act. The FAQs will outline the process, and basically it's very targeted at low-income communities, and the SBA process is to reach out to you if you had applied in the past and didn't get full funding. There is additional money available, so they've created a new $5,000 program. SVOG, we talked about in detail last week, so I've given you some links to the town halls where we've gone through those. But it's really important to note, we started out with the conversation saying, yes, program is open. Yes, program portal is down right now. So be patient. And I thought it was interesting. They are requesting a tax transcript form for every applicant, which is obviously an anti-fraud measure. A report came out from the Inspector General just last night about the potential for fraud, waste, and abuse in this program. So expect there to be some double checking and some verification requested. And then the restaurant fund will spend more time at a future town hall because the program just isn't there yet. We're expecting it to roll out either in late April or early May. And we're still looking for some details there, but we'll keep you posted.
So a lot there, Lisa. I think all these relief, and one thing we're going to see high economic growth this year. We got a lot of these relief programs to support these businesses as the pandemic, hopefully, and these shutdowns come to an end. We're now going to bring Carrie up to give us the practical tips. It's been busy. It's been a busy time on tax Twitter. It's busy right now. I'm seeing a lot of the Q&A that came in after Mark's presentation.
Oh yes, absolutely. And honestly, Eric, it's probably been, while demoralizing for us, it's been interesting to really stay engaged with the members, the practitioners, and even some clients that are jumping into the social game just to ask for help, vent, share tips and best practices. It actually feels a little bit like a little family, and I think it's been an extended community for tax practitioners, like I said, to bounce things off each other. And then we've inserted ourselves at every opportunity we can to help provide assistance where we can. And also it brings back questions and items for us to look into. So with that, if you're not already following on social, it's a good idea to Twitter, social media, just to get involved a little bit. If you feel like you could use some peers, if you could use some moral support, this is a great place to get started. So with that, what I want to talk about is really, I say what's keeping you up at night. And that's the truth, because there actually have been threads about, is anyone else not sleeping? So this is very literal, but also, it's what we mean is that practitioners have a lot on their minds. There is so much going on that we've never seen before. In a compromised work environment, a compromised environment, the IRS, has reduced service levels. And so it's a matter of what's really getting to us right now and what do we do know. So I'm going to start with what we're dealing with. If you don't know, I suspect most of you do, but what we do know. And then I'm going to talk to you about some of the things that, while not necessarily a recommendation from the AICPA, these are recommendations and tips and best practices we're hearing from your peers. So first of all, the deadline for the Q1 estimated payments. Despite our efforts, as Mark Peterson shared with you earlier, the IRS is holding to April 15th as of right now, but that still may change. And yes, I'm aware that the IRS has gone out on several occasions, including today, a couple hours ago, to make clear the position that first quarter estimates are still due April 15th. We realize, that the work involved in computing an accurate estimate is essentially the same as preparing the tax return, right? I mean, to get a really accurate number, especially if your client situation changed significantly due to the pandemic, or you've taken on a new client and you don't really have history. And I also realize, and we all do, that relief at this point may feel like it's little help, but we're still hopeful the IRS will move this to May 17th, because we do still believe there are a number of reasons that taxpayers may benefit. And we are grateful, very grateful, for the activity going on in Congress to try and help those taxpayers really in need. So, so kudos to them. Thank you. Again, there are no clear answers on this. So this is a hot topic. The conclusion we've come to after speaking with a number of our volunteers, renowned technical experts, research ourselves, is that to just be safe, a taxpayer should make the Q1 estimated payment on or before April 15th. All right, so I'll come back to what else you could do on the next slide, but that's where we're going to end on that one. Now, gift tax returns. This again is another issue that wasn't addressed by the IRS, and it was specifically not included in the updated release extending additional deadline movement. So practitioners have been asking how to handle extending gift tax returns when not filing the individual extension by April 15th. Thankfully, the IRS actually did come out a couple of days ago with some answers. And thankfully, it also happens to match the recommendation in our attached resource, but it didn't address everything. If the client, the key here, and I will come back to you about what it didn't address and how we're going to recommend that you do that and how we're hearing members are doing that. But the bottom line is, if your client is prepared to file their individual extension by April 15th, it's an easy answer. Just file it by April 15th, and include that the gift tax extension is going to need to go on. It will need to be extended as well. If it's not possible or not in the best interest of your client, then you're going to need to file Form 8892 on or before April 15th, just to request an extension of the gift tax return. And before you all start loading up the Q&A, I do realize that there is a box that needs to be addressed on that form, and I'm going to talk to you about what we suggest you do on the next slide. So another issue that we're hearing a lot about, we're still seeing erroneous notices. This continues to be an issue on several topics. Thankfully, the IRS did come out on the issue of the unfiled 219 returns and addressed how that they had resolved it. They were aware, they were working on it. But as recently as this week, I'm still continuing to hear from members who are getting, whose clients are getting these notices. So while aware of it, while we thought resolved, it clearly is still not fully resolved. The other thing is going to delayed responses to notices. Members are continuing to struggle with resolving tax notices for clients. The IRS has acknowledged that they're behind processing millions of pieces of correspondence. And one of the things that we know is that they prioritize certain items. They don't follow a FIFO approach for inventory accountants out there. It's not first in, first out. If something comes into a center that has a check in it that appears for something that's, that's really late or is really high priority, that mail is going to get processed before something that may have come in sooner that appears to be less important or urgent. So that is an additional frustration because we're also hearing from our members and CPAs and clients are receiving responses to letters that they sent more recently. And of course, that's adding to the anxiety because then, of course, what do you think when you mailed something for client A 6 months ago, no response? You mailed something for client B a month ago and you have a response. My first instinct would be they didn't get the first one, right? If they're this caught up, they didn't get the first one. Good news, that's not true. They're not processing them in order. Rest assured that is something that happens, but it's something we should be aware of. And then most recently, as the preparers and the members we have that are in the states that were declared as disaster areas are finally getting in to file tax returns, file extensions, and they're getting rejected. So so the IRS systems have not quite caught up with the disaster relief that's been provided, and taxpayers' returns are being rejected for being late filed or for missed filings. And so we're going to talk a little bit about how best to handle that. And then finally, there still is missing guidance. So even if all of these other things were solved and we could actually sit down and have the time to prepare returns, we don't have all the answers. And most of them really have to do a lot with the PPP, which Lisa has guided you through so well, and Chris on the ERC. And it comes back to some of the things we've been asking for some time now, such as the treatment of salaries for officers for the purposes of computing credit, and the PPPs and the basis issues. So we know those are issues. Now that I've obviously stated the obvious to many of you, I'm going to go on to talk to you about what we're hearing from our members, what we're hearing from firms on how they're working around these issues. So let's start with the big question, which is April 15th the deadline this year, or is May 15th? And are we all pushing hard towards one or the other? It's some of both. That's really what we're hearing. When it comes to the first quarter estimates, I realize it may feel like a moot point to come up with a best practice right now when most of you have already been forced to take action. And trust me, I've been saying this for 2 weeks. If we don't get them relief now, we might as well not bother. However, I will say that there are still some good reasons to extend relief, even if you've done much or most of the work. There are people who are going to benefit, such as your clients who maybe you get that Q1 estimated tax amount computed, but what if they're struggling to come up with the cash to make the payment, right? So, I like to always try and see the plus side of everything if I can. The downside is it's too late to get relief, maybe. The upside is, but you still get another month to pay if we do get late relief. So we're remaining hopeful. However, what we're hearing from firms is if you're open to a new strategy, what they are doing is they are prioritizing the Q1 estimate work based on certain factors, which you have to decide for yourself. If it's just not practical to get them all done, you've got to decide how you're going to prioritize. The number one reason or the number one factor that we're hearing is the dollar amount of the tax expected. So it's a matter of running through your client list, although I probably don't have, you don't necessarily have to do that. Many of you just know who your clients are that are the ones that have the big checks. If they have a big check, they should get done. They should get prioritized. If they have a high income, high history of tax due. If they're a client who was subject to unemployment and you got one of those, wait, was I supposed to have income tax withheld from this unemployment that both my wife and I received that far exceeded the non-tax portion? Yeah, they're going to owe some tax. And they've never probably had to pay estimates. If this is a new situation, they might need to be prioritized. New clients who started businesses last year, clients where it's not simple to just go back to a prior year and say, you know what, let's just pick 100% of last year and say your first quarter is 100% of 2018 or 2019, right? So they're prioritizing the work based on that, but it's not a single decision. While you have to decide what you're going to do in your firm, you have to make your clients aware. And so the second piece of this is, if you're doing this, then it's best to let your clients know, we can't get this done for you by this date. There may most likely be penalties and interest if this deadline is not extended, and come up with a process for how you're going to deal with it. When I was in practice, almost every firm I worked at, the rule was if there were a penalty, the client pays the penalty, and we would pay the penalty if it was something that was on us. If it was interest, I never worked for a single firm that would pay interest, and the reason was always the same, because the client had a use of their money, right? So they had the use of their money, we're not going to pay interest, but that's up to the firm to decide. The other thing is they're looking at, when we come around to file the extension, do I expect to have a large overpayment that I can apply back to the first quarter? So that's another question that's hopping around, popping. We're getting a ton of calls on it. And we have repeatedly asked the IRS to clarify their position on this. There's nothing official out, but what we are hearing is that for the most part, the IRS, from the people we have heard, they are going to consider, and let me back up and slowly explain what I mean. You file the extension on May 17th. You don't make a Q1 estimated tax payment because you just couldn't get the information. You couldn't calculate an accurate amount. But by the time you file the extension, you have a better idea. You have them send in a large payment with the extension on the 4868, and then you realize that they actually are overapplied when you do the final return and say, I want you to apply that overpayment back to Q1. We are not able to find definitive answer that says that will be applied back to April and won't be applied to May. Alternatively, we have also read some literature and some guidance that indicates if you pay it in May, it'll move forward to June and get recorded as a June 15th payment. So since we don't have a clear answer, we are really suggesting use the same priority method. If you really think it's going to be a large amount, don't leave that up to chance. If you aren't even certain and you just simply want to say, just make a Q1 payment, pick a dollar amount and send all those clients, make $500 payments. So come up with something, follow the process, do the best you can. Now, I'm going to step back, and I apologize for those of you who think I speak too fast. It's because I'm trying to share a lot of information in a really short period of time. But the next one is the gift tax. So I said the IRS addressed it. They did, but they didn't address everything. One of the things they specifically excluded in their guidance was the little box that you have to check on the form 8892 just to extend a gift tax return. And the box says, I'm filing this because I'm not going to extend my individual return. Well, that's a big open item this year because you may still need to file an extension for your 1040 on May 17th. They haven't addressed how to handle that. Our concerns internally are if you file the 8892 and you check the box, do you run the risk of invalidating a future 4868, right? On the surface, that sounds ridiculous. That seems like it would make no sense. That doesn't mean that the IRS system isn't going to do that and trigger notices that now you have to manually go resolve. So what we're hearing from a lot of firms is if you're going to apply for that extension for the gift tax return, don't check the box, leave the box blank. And some firms are even writing see attachment, and they're writing a declaration on the attachment that says the taxpayer is not filing for an extension of the individual return at this time, but they may be later or they will be later. It's just to sort of preserve their right to come back if it gets challenged in the future.
And Carrie, one thing, I mean, you've got there's just so much great, valuable practical advice there, and
Sure.
we've got one of these, right? One of the documents that are in today's downloads are in the resource materials. But maybe just real quickly here, because then we've got a couple of questions we're gonna take an open forum and then close with the resources.
Yeah, so the resources, we've uploaded something to the portal today. You're welcome to use that. I put a link to some other resources that are good, and we'll be adding information as we need to. I just want to add 2 quick points. When working with the IRS, one of the best strategies that I have heard is if you get rejected filings, try again, right? Keep trying to file because it could be something that gets worked out, but save your record of filing in there. And a worst case scenario, print it and paper file it. And then on the open cases, stay on top of them. Don't let them get behind. Consider getting an 8821 release and getting lower level people to manage those open cases, make calls, make inquiries, look into things so that they have access. So really with that, I'm going to stop. We're going to answer some questions. Yeah. Again, there are resources here. Thank you for having me. Always much more to talk about than we have time, but I appreciate you inviting me.
Yeah, thanks, Carrie. And I think what we're going to do here is the team, we're not going to bring everyone up here for open forum because our team has been busy. I've been seeing it. They've been busy answering hundreds of questions. It's impressive. We've got, around 8,000 people on, 1 week before just the 15th deadline here. So thanks for attending and thanks, Carrie. And what we'll do is just kind of take you through some of the additional resources. So here, most recent town halls, there's a lot of people that are watching these archives. They're also on Spotify and Apple Podcasts, and absolutely you can share them with other members of your firm. The ongoing SBA Center at the AICPA website continues to get updated, and we post all of the information that we discussed today. Many of those new relief programs. Twice a week, we're holding CPA business funding portal discussions where we get into great detail around the error codes, where things are going right now in this final stretch of PPP. So you're welcome to attend that. And we also have a more in-depth resource center based on the tens of thousands of applications that we're processing. So a lot of information there. Lisa?
ERC is such a hot topic. So our tax section has created an ERC hub for you. So you can reference a lot of resources there. And they've also been updating their tax state treatment chart on the next slide that you'll see. And I threw in a new one because there's another wrinkle to tax season, which is the unemployment tax benefit not being taxed at the federal level, but what are states doing about it? So we released a blog this week that I wanted to highlight for you in case that is coming up in your practice.
So again, we stay active on social. When we find out if something happens tonight or tomorrow related to what Mark Peterson discussed, we'll absolutely be posting that on our social media sites as well as our websites. So stay in touch with us via those avenues. We are going to take next week. We're not going to have a town hall next week. We set these town halls up well in advance so we can get them on your calendar. That's why, we didn't think it was appropriate to have one on April 15th. There is going to be a lot of work anyway, based on, the work that we've been discussing related to the quarterly estimates. But we will be having our next town hall on April 22nd. Barry Melanson will be joining us. We greatly appreciate spending this hour with you on a bi-weekly basis. We appreciate your questions. We appreciate your engagement. We know there's a lot of stresses in the system right now. So hope all goes as well as possible with you and your clients over the coming week. And we look forward to being with you again shortly.
Thank you.
Thanks.
Thank you for your participation. You can now subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and AICPA TV. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.